Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Hi, everybody. I'm Paul Yeager, and welcome in to the MTOM Show podcast for another installment. New episodes come out each and every Tuesday. Subscribe, follow, or just make a habit of going to our YouTube page or wherever you get your podcasts, and we'll get you filled up as we give you background information about what's going on in rural America. So we love having conversations, and today we're having a conversation with Jeremey Frost. He buys and sells grain. He writes a newsletter about grain. We're going to talk about corn, wheat, soybeans, sunflowers. I learned something about sunflowers today in a place that you could buy and sell them that's way above what you might be getting at your local co-op or wherever it is that you sell your sunflowers. Why haven't I thought of that? That is what we're going to cover. And Jeremey pays attention to the Market to Market show, specifically comments made in 2020 about what could happen in 2023. We're very, very close to flipping the calendar to that year and what could happen to grain. So we will see what he thinks will be the big winner, both in acres and in price next year, and what factors are at play and what you should be doing to prepare yourself for these days ahead. That's this installment of the MTOM Show podcast. Onida, I had to spell it, or I had to look at your signature. Tell me where Onida, South Dakota is.
It's right in God's country, about 30 miles north of here. It's got more bins than people. It's got 2 elevators, an ethanol plant, the newest ethanol plant in the U.S., I believe. And it's, like I say, right in the middle of South Dakota, right in the central part of South Dakota, about 30 miles north of here, the capital.
Is this home? Is this where you were born?
I was born in Holben, which is about 50 miles north of Onida, kind of right in that Gettysburg area. So it's been home for me for 20 plus years or so now. I think I've lived here. My kids have all went from kindergarten through graduating in Onida, so it's been home for a long time.
When did you get the grain bug?
So I left when I graduated college. I went to CHS. I went to interview for a state job, and I went at the local elevator at CHS, and I ended up taking that job instead of a state job. And I've been doing grain basically ever since then. So for 25 years or so.
But I guess I didn't ask specifically growing up. Were you on the farm in the city?
Well, I had divorced parents. My dad's a farmer. My grandpas were both farmers, and my mom owned a bar. So I did a little bit of both.
A little bit of both. Okay, yeah. So why not jump into farming?
Well, I didn't live with my dad. I lived with my mom, and that was probably why my brother's still on the farm and I'm not. I mean, I basically had it in my passion and my blood, but I didn't spend all my time on there. I did other business ventures that my mom had did and stuff.
What would you consider what's a typical day for you?
Well, it varies a lot. I mean, depending on what I'm working on, but it's talking to farmers nonstop and working on buying and selling grain or writing articles or doing audios. I do a lot of audios that we send out to guys, and basically sometimes it starts at 6:30 in the morning and ends at 10 o'clock or 11 o'clock at night. I mean, sometimes I'm sitting on my iPad or my iPhone all night long while we're watching TV with the family and working on stuff. I mean, it varies every day. I would say that in the egg industry, in the grain market industry in particular, there is no typical day. I mean, they're always unique, and they're always very well to make a guy humble in a hurry. And it's pretty hard to outguess these markets.
It is, and you have to be up on them all the time. You mentioned the whole, work at night. Do you like the evening grain trade, or what we call the overnights? Is that good for the industry?
Well, it's it's good for the industry, but it's also pretty challenging. I mean, for farmers in general. I mean, when you see a farmer will look at it and will be up 10 or 15, 20 cents at night. And then like you take a few weeks ago when this Russia news hit and we were up 10, 20 cents. And then And then at night, about 5 o'clock in the morning, he said, well, we're going to let the export corridor go on. And all of a sudden we're down 50, 60 cents by the time the farmers wake up. So it can be challenging. I mean, the main thing is that it's pretty thin at night and it's not very liquid. Sometimes there's not a lot of news, and it's pretty easy for a guy to get chopped around. I mean, if a guy was just trading it or a farmer's watching it, I mean, it's an easy way to panic sell is watching markets at night sometimes.
Ah, the old panic sale.
Yeah.
What panics you about watching the commodities?
Well, I just try not to let my emotion get involved. Otherwise, I'd be trading wheat and sleeping on the street, as they say. So I try to, like I say, just not be involved emotionally, because otherwise you don't do a good job. I mean, you get your emotions involved in the markets, and it's very difficult. Very difficult.
And it's hard for a producer. I mean, we talk about it on Market often with different analysts where I'll say, what is the best way to take emotion out of it? How do you answer that question?
Well, by having a plan. I mean, one of the big thing I think of is every farm, every operation is different. I mean, I really stress that when somebody calls me up and says, hey, should I sell or should I buy? I mean, I could give 5 different guys 5 different answers because their operation's all different. Their risk management's different. Their risk reward profile is different. When they need money, I mean, what they have to do with their operations different. And that's the big thing about marketing is every farmer kind of knows what they should do. Every farmer kind of knows at their gut, hey, I should be selling because I have this and my operation needs me to do this. And it's when they start listening to analysts that give the blanket recommendations. I mean, that's not a blanket recommendation, not for farmers in general. I mean, it's good information and it's something to take into account, but it's not going to drive a decision. I mean, your decision from a farm needs to be based on your unique situation, which is going to be different than your neighbor, and it's going to be different than your family members, and it's going to be different than everybody else. It should be your unique marketing situation.
Do you subscribe to the theory that we're not a farmer's not necessarily competing to the farmer across the road because of what you just said? Everybody's situation's different.
Well, they're all competing, but they're not. I mean, I would subscribe to the theory that they're not competing. I mean, my big theory that I've been focused on lately is farmers need to become price makers instead of price takers. And what I mean by that is, I mean, like big corn basis in my area, in 3 weeks, it's moved 45 cents. So you got it. I know from sitting in my shoes being a grain buyer for 20 years, I mean, there's a lot of pushing in basis sometimes. And if you're not becoming a price maker, you're being a price taker, you're going to give up a lot. And I think a lot of farmers need to realize that they've gained a lot of wealth over the years. They've gained a lot more advantage than they had 5 or 10 years ago. They have a lot more control of these markets than they realize, especially some of the niche markets. I mean, the specialty grains, the sunflowers, the millets of the world. I mean, the corn and the soybeans, I mean, you're not going to get quite as much push there. But if you have high pro spring wheat, and there's a lot of times that you're getting very big pushes versus the posted bid, and you really need to walk into your elevator, and when they give you a bid, say, hey, this is what I want for it. This is my offer. Don't let them give you a bid and take it. I mean, that's my opinion.
Does that work?
Yeah, it does. I mean, it historically is done. I mean, I know guys that have historically always, I mean, one thing we keep track of is what we've got our farmers versus the average posted price. And a lot of times it's been 45 to $100 an acre on different commodities. And we've done it for years and kept track of it for years. And it works. I mean, does it work for corn when everybody's flush at it and it's harvest? No. I mean, if they're piling on the ground, are they going to pay you more just because you want more? Probably not. But if they're looking to say, well, my pile's not full, what do I need to do to get this in versus you putting it in your bin? I mean, a lot of buyers are going to pay up a little bit. I mean, it's just common supply and demand. So.
The old supply and demand rule rears its head again. Where do you see understanding my cost of production in making a grain plan?
Well, it's more of what's my goal. I mean, guys need to understand their cost of production, but it's more, hey, what are my profits I'm trying to make on this, and tying it together. I mean, the worst thing a guy can do is to come into marketing and be making sales one way, and then the next year making sales a different way, just because, and then trying to get the market just outguess it. Cost of production's big, but for a lot of guys in my area, they're farming a year behind. I mean, most of my guys have, I mean, 1 million, 2 million bushels of storage. I mean, just huge, large farmers. They don't necessarily need to move the grain. They're farming a year behind. So if you're farming a year ahead of time where you're making pre-harvest sales, then cost of production's pretty big. But if you're farming a year behind, it's not really that important. It's more, I mean, what can I do with my money? What makes the most sense? Not what's my cost of production, and I mean, can I break even? I mean, it just kind of depends on the farmer situation.
The As the farmer makes their way to the end of the year of 2022 and the year that it has been, how do you suggest a producer positions themselves? Again, is it all about their own situation, or are there some standard things that you like to tell people that they should be doing as the calendar ticks on November into December?
Well, it is all about their own situation, but generically, I mean, guys should be probably patient on making sales this year. I mean, there's a lot of upside. Our balance sheets are all tighter than they were a year ago. And the USDA used their magic pencil here a few weeks ago and said, well, you guys produced 1 billion bushels less of corn. Your demand's 1 billion bushels less. Will it be 1 billion bushels less? I don't know. I mean, the exports are going to be down because we don't have corn to export. But I mean, the ethanol plants are making plenty of money, and we have bean crush margins off the charts strong. You've got ethanol margins good. I mean, the cattle margins are good. I mean, there's just a lot of good demand scenarios behind here. And then the fact that we have, I mean, the reason China's been locked down is partially because they don't have way to, they don't want their people to, I mean, that demand to grow like it will when they unlock them. They can't afford it. I mean, that grain's not there for them to have their countries opened up. I mean, that's a big factor to be considering.
So you subscribe. I'm sorry, I'm used that word again. I'm hearing you say that maybe the COVID lockdown isn't all about COVID, but tamping down demand for the grain and food.
Yeah, I mean, I think that the real reason that this COVID happened is because the fact they need to, I mean, trim demand. I mean, they need to control people because there's not enough to feed everybody. I mean, there just isn't. I mean, so that's my theory, and there's a lot of other people that are in that camp, and there's some that think that that's bullcrap. But I guess only time will tell.
What do you make of the American farmer? They don't have to necessarily be in South Dakota, but the one in Illinois or Indiana or Iowa. Uh, who do they need to pay attention more right now in the next, we'll just say 6 months to a year? Is it China? Is it South America? Is it the other farmers in the United States?
Well, they need to watch what China's doing, and I don't think the Chinese are going to come out and say, "Hey, we're opening back up," because if second they say they're opening back up, I mean everybody's going to run it up on them. They're going to probably come out there and slowly reopen it, and so that if something happens, they don't have to look like idiots. And then I mean you have to pay attention to South America's weather. I mean that's going to be important, obviously. Do you have to pay attention to what your farmer's doing? I mean, kind of, but that's more of a basis deal. I mean, if you're seeing your farmer haul corn off to, I mean, a good example, I had one of my relatives was hauling corn 50 miles and they're making $1,000 a load on corn. Well, all of a sudden, 2 weeks later, that ethanol or that basis where they're at locally is 45 cents better. Well, their neighbors should have realized this. He's calling his corn. It's supposed to go here. That means I'm going to get paid more for my corn. So I mean that's the thing to watch for your neighbors is are they filling up these areas that are deficit corn, and that's going to mean that my corn, when I didn't have to spend all that extra freight, is probably going my basis is going to get better. But I think you have a lot of factors. I mean, you have the China situation, their COVID policies. I mean, that's going to be a big driving force. You have what's going to happen with the stock market in these elections. I mean, how are those all going to shake out? I mean, there's a lot of factors that are going to drive these prices, and the bottom line is you have farmers that have a lot more wealth than they had a year ago, or 5 years ago, or 10 years ago. They've got high inputs, but they don't have to buy them today, and they don't necessarily have to lock in sales at the same time. So you have farmers that have a chance to control the market better than they've ever controlled it. There's a lot of factors why we could go a lot higher. I mean, I'm in the camp of when Sue Martin was on your show a few years ago and said we're going to have all-time high prices. I think we're going to see all-time high new high prices in a lot of grains. So
You heard about that little exchange?
Oh yeah, I watched it.
That's legendary right there on Market to Market, Jeremy, right there. That is that comment, and Sue was talking about 2023.
2023. Yeah.
And that's coming up. We're facing that. As you look at the wheat market in 2023, have we hit the high before we even on January 1?
No, we're gonna make new all-time highs in Chicago wheat and KC wheat. Indianapolis, maybe not, but we're gonna. I mean, the crop's the worst rated ever to start off. And I mean, we maybe will get some rain and it won't come, and maybe will be a better crop than it looks today, but we're going to have some weather scares. And I truly believe that these weather scares, unless South America just gets everything perfect or some other black swan, I mean, the odds are much higher that we will make new all time highs than that we won't. I mean, it doesn't have to shake out that way, but the odds, I mean, they're just a lot more. I mean, farmers, once the bins are shut, the bins are shut. I mean, why are they going to sell? They don't need the money. They don't. I mean, they don't need the room. I mean, there's not a lot of incentive for them.
Yeah. Well, let's look at corn then. Yeah, well, that as 2023 rolls, do you see January 1 as the high water mark for corn?
No, I think we'll see $8.50, $9 corn come May, June. I mean, I think there'll be an opportunity to sell at that time when this weather scare happens, like it always does. I'm not in the camp that weather's going to be perfect up till then, and we'll have this massive crop. We might have a massive crop, but they released the baseline acres. I mean, they're coming up and they're going to be pretty high. But when they add those acres in there, they're coming from areas that can't produce 200 bushel corn. I mean, they just can't, and they're going to start off the wrong side. And I think the funds are going to look at it. I mean, if we do something where interest rates get cut or stay flat in the next couple months, the funds are going to roll right back in and start buying the grains. And these elevators are going to go broke if they have their shorts in the wrong positions.
Well, and I had an email about that earlier today asking me about looking at some elevator issues, and we might just be getting started then if that would roll. So I'll ask you the same question about soybeans. What do you see in 23?
Well, I mean, South America has a big impact, but the biggest thing in soybeans is the margins. I mean, these crush plants have all-time record margins. Why were they not process as many beans as possible? Why will they not build more like they are? And why will beans not go higher? I mean, they don't need. I mean, they don't need to go lower when you have all-time record margins. I mean, so I think same thing. I mean, we'll see a weather scare in South America and the U.S. and beans will make their highs sometime next spring, early summer on a weather scare, and I think they'll make new all-time highs. I think they'll be north of $18, and I hope we're closer to Sue Martin's type numbers, which could really happen.
But there's a downside to those high numbers. I mean, we heard about inflation, and what does high food input costs do to that in the equation?
The farmers get so little bit of it. I don't think it really matters, is my opinion. I mean, yes, it makes a little difference, but I was looking at a sunflower deal the other day in my newsletter, and the flowers were selling on Amazon for $399 per hundredweight, and these farmers here are getting $22 to $25 per hundredweight, and they have to bag them and clean them. I mean, that's it. I mean, it's not you don't have all this extra cost, and I mean, so the farmers are getting 10%. So you can't tell me there's not a lot of room for these commodities to go up when the farmers have such little impact of what they're getting. And it's not like the bags cost that much. And I think I mean, that's a more simpler one than corn and ethanol and soybeans and the soy oil and all that. But the reality is I mean, ADM's earnings a few weeks ago, and they were double what they were the year before. And it was soybean oil processing. CHS made over $1 billion again. I mean, these elevators are making money. Unless somebody's on the wrong side of the market, I mean, it's been pretty friendly to the elevators and the buyers. So.
Well, speaking of friendly, how about livestock? I mean, the packer margin has kind of evaporated at the end, the 3/4 mark, we'll say, of 2022. What do you see for the live cattle as we flip the calendar? Or at least, well, maybe I'll put you back on point for the end of the year. What do you see here in the end of the year moving forward into 23?
I'm friendly cattle, but I'm not a big cattle guy, to be 100% honest.
That's fine.
I don't do a lot of cattle. I work with a lot of farmers. I mean, that have a lot, but I'm not a big cattle guy. But when I look at the charts, I mean, they look positive to me. I think there's some risks that the grain markets go crazy higher, and that could be some pressure. And then the demand equation on the cattle. But overall, I mean, I'm friendly to them, but I'm not going to make a bold prediction about them because I honestly don't know enough to make that prediction.
Anything with if you're that way on cattle, probably the same on the feeders. And what about hogs? Same thing.
Yeah, pretty much the same thing. I don't have a lot of good input other than the charts to me look friendly and viable. And the big risk is, I mean, the recession talk. And that's the risk is where is our demand going to come from and can it hold up? But I'm not a big cattle livestock guy yet.
Let's. This is not. We're going to just use the word, but it's not what we're going to talk about. There's a phrase out there about Chicken Little talking about the sky is falling. How long? And it was written by one of the market analysts in their newsletter, and they said, at what point does all of this discussion of this recession that is supposed to come hasn't come yet? How long before the American says, I guess it's not going to come?
Well, I wrote on my newsletter on October 13th that I thought the markets reversed and we made our lows that day. And I stick to that I think we had way too many people thinking the sky was falling and it just ain't happening. I mean, now maybe I'll be wrong and there could be things that happen that change that. I mean, the election results and different things. But I think guys are going to start looking at, oh man, I missed buying the stock market. Man, I missed that opportunity. And I think money will start flowing in there. I mean, the thing that's different is there's returns on safer investments today. I mean, that's the difference. I mean, that's what maybe keeps a lid on it. But I'm not so certain that the Fed is going to continue to hike interest rates as fast as they have been. I think that they could slow that down a little bit, maybe pause it, maybe take a step backward in a few months. And if that happens, then I think the economies are going to just go roaring. And I think that, I mean, the reality is the only one that's been hurting has been China. And it's because they have to keep it hurting.
Mm-hmm.
They don't have the stuff to feed their people.
In 2023, we're recording this. We don't know the outcome of the elections. We'll just say that. But as we look at 2023, what do you see as the biggest economic story that the average consumer and then the farmer needs to watch in 23?
Well, it's going to be the interest rates and it's going to be China. I mean, if China makes a headline, and then it's going to be, Russia too. I mean, the war in Ukraine, Russia is going to be a big one. I mean, what he does or doesn't do, if they extend stuff, I mean, all that is going to be a big impact. I mean, those are the big three things that I see. I mean, and then what are they going to do to fight this inflation? I mean, farmers are really not participating in this inflation like you would think. I mean, the prices don't indicate that.
And do you buy that inflation's happening in other countries besides the United States? It's not just an American isolated item?
Well, I can believe that. I mean, I buy that. I mean, they say Brazil's got 60% inflation or 40 to 60%. And I mean, I buy that, but I don't know if that the farmers there are taking advantage of it either. They're getting
Right.
I think it's just big money making money.
All right, let's get close to the end with this, Jeremy. What's the biggest decision for a farmer deciding what to plant in 2023, and what crop do you see is the big winner in acreage that either goes up or goes down the most?
I think, corn's probably the one that's going to go up the most. The biggest decision to what to plant is, hey, can I get my inputs locked in? And if I get my inputs locked in, will they actually deliver? I mean, there's companies out there this last year that they didn't honor some of the previous stuff they had sold. So, I mean, who you're doing business with and making sure that you can get it, I mean, that's a big thing. And I would not recommend guys to be making any sales for 2023 until you have something locked in. I mean, that just seems just like suicide to me. I mean, that's the big risk, I think. But I think corn's probably going to be the winner. But I think we're going to be into an acre war because of this, and I think we'll all be the winners, and that's why farmers should be patient. I mean, we're going to have everything kind of competing for the acres, and we don't have enough acres. I mean, spring wheat's going to lose a lot of acres until it rallies. I mean, right now there's not going to be many farmers in North Dakota, South Dakota wanting to plant much spring wheat. It's really going to struggle. So I think the winter is going to be all the prices will go higher, and we'll see it. But as far as acres go, I'm guessing corn acres will be up a little bit, and maybe from cotton. I mean, that's where it's probably going to lose a little bit. Spring wheat's going to lose a little bit.
Yeah, cotton has been that has been heading south for quite some time here. Doesn't seem to be competitive in trying to retain any of its acres. It sure sounds like it's going to lose.
Definitely, without a doubt, it's going to lose a lot of acres, and what it's maybe going to need to. I mean, that's can change by spring. I mean, I think we'll see these markets rally because of that, because there's not enough acres or everything. I mean, the soybean complex, all of the additional plants that are going to be online in the next year. I mean, we can't afford to continue to export grain like we have been.
Do you buy? What do you've mentioned sunflowers already. I mean, the American producer of sunflowers is a little different from, say, South Dakota to Kansas, two different types. Do you see that some of that global demand gets filled by United States producers of sunflowers?
I think there's a good chance that it does. I mean, that these crushers get a little bit of business, and they keep in mind that the U.S. is about 10% of what both Russia and Ukraine are for sunflowers. So it doesn't take much business at all, and all of a sudden that market could get really hot in a hurry. And it's a market that 3 years in a row, our local market has doubled in price. And I expect this to be year number 4. And the flowers are in really strong hands, the farmers that grow them. And I would think that the crush will come in. I mean, they're making a lot of money on the sunflower oil, a lot of money from what my sources say. And you don't have a lot of competition there. So, but when they get on the wrong side of the market, where when ADM and Cargill have to start competing against each other, which they will eventually, I mean, it's going to run the thing up in a hurry.
Well, and once we get done here, I'm going on to Amazon to look at this sunflower crop that you're talking about for sale.
Yeah,
I had no idea.
It's in my newsletter, and I point out the company that's selling them too. So,
see, I have to admit, we don't cover sunflowers as much, and I did miss that one in your newsletter. Sorry, Jeremy.
That's okay.
That was your quiz to see how much I've been reading, right?
Yes, it was, sir.
All right, Jeremy, I appreciate your time. And one more thing before we wrap. You mentioned USDA. How do you see the word of gov? Is it trade too much? Does the market respect it, fear it, disregard it?
Well, it kind of is all three in one. So when it comes out, it's like it's the gov, it's what it is. And people trade it. About 10 minutes later, if they don't like it, I mean, the market will start trading on its own. If they don't believe it, I mean, they're just going to trade on their own. I mean, but it's kind of garbage information. I mean, I know from working at CHS for 20 years, when they called me for my stocks report, I never told them the truth of what I had once. So, I mean, it's kind of not really good information sometimes, but it's the best that we have. The market's going to trade it. I mean, they're not going to trade Pro Farmer numbers. They're not going to trade FC Stone or any of these other guys' numbers. They're going to trade the USDA numbers, but they're quickly going to move to what the cash markets are telling them, what the spreads are telling them, what basis is telling them, what everything else is. So they're going to trade it for 5-10 minutes, unless it's materially changing. But if you're talking about some of these baseline stuff or some of that, they don't really put much into it. It's just the WASDE reports are the ones that they put a lot into.
All right. Jeremey Frost, I appreciate your time. Thank you so very much for sharing some insight.
Yep. Thank you, sir.
My thanks to Jeremey Frost. Always good to have a new friend to discuss, find out what's happening in his world and how he sees things. New episodes each and every Tuesday. Feedback for me, email it, markettomarket@iowapbs.org. All the producers of the show read that account so you can talk to us. We'll see you next time here in this production for Market to Market and Iowa PBS.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.